Good evening from Singapore, but good day from wherever you're watching our panel. We're going to talk about arguably one of the biggest mysteries in recent years in the oil markets. Where is the glut? And I really can't think of a better panel to have with me to unpack this mystery than the three gentlemen today. At the Oxford Institute of Energy Studies, we have Paul Hickin, Chief Economist and Editor-in-Chief at the Petroleum Economist, and Neil Atkinson, former head of Oil Markets Division at the International Energy Agency. I would like to start with you, Paul Horsnell. And if we are in a glut, why does it not feel like it? Why is crude not in a contango like it was in 2015 or 2020? Why is Brent still holding on to $60 a barrel?
That's a very good question. I think the simple answer to looking backwards is, the surplus for last year. I think it was overestimated, but whatever it was, none of it has cropped up in the form of commercial inventories, sort of certainly within observable OECD commercial inventories. Then you're on to the question of, well, does it really matter what happened to the rest from a market point of view? And I think it's still there, sort of in terms of perception of, yes, okay, let's hunt down wherever these barrels were. I think in rough terms, said a lot of them just didn't exist. The surplus was never that large. A lot of them have gone in as strategic inventory builds in China. And again, I don't really worry about those. If they're strategic inventory, we're not going to be seeing them again very quickly, except in the case of a crisis. So that doesn't really affect things. Some of it may have gone in trade routes, so there's just more within the system. There's bits and pieces, but overall, there hasn't been an inventory build where really should make a huge difference to the curve or to prices. The scale of it, I mean, the EIA, and I stress here EIA, not IEA, the US Energy Information Administration puts the surplus in October, so 3 months ago, at 4.5 million barrels a day. And, clearly there is not 4.5 million barrels a day of surplus that's put through onto the system. So some of it is just miscalibration of models and bits and pieces. But it's a strange story in the sense this surplus has been looked for over a year. It was an imminent surplus at the time. But going back to October, remember all the stories on the media of, oh, there's 1.5 billion barrels at sea, and it's all going to arrive in the next 6 weeks. Forgetting the fact that supply chain, you have to put something in at the other end as well. It doesn't all just sort of come out. Well, those 6 weeks have gone, and another 6 weeks have gone, and it's not there yet. So I think there's all kinds of stuff going on there. But first of all, final word in it is, I think perhaps for analysts, we have to be a little bit careful when we project a large surplus. That doesn't necessarily mean carnage for the market or observable increases in inventories quickly. It's lags and other bits and pieces.
So in your reckoning, Paul, what did 2025 balances look like?
What, for 25 or 26? I mean, for
25, because it's important what
that's
base
the baseline.
working on, right?
Yeah, I mean, got to build across 25, but probably 900,000, 1 million. The surplus, I've got at least in my model for Q1 is about 1.5 million barrels a day, which is a normal seasonal surplus. And so the big question mark, and pose that really for the other panelists, is, okay, that 1.5 million, is that really just a normal seasonal Q1? Or is it something more structural? So, i.e., will it go away in Q2? Because if it's going to go away in Q2, again, it's then an issue we don't need to worry about. The market will start worrying more about the tightening of balances in the second half of the year and into next year, with sort of just the tone of the narrative starts to change a bit.
Yeah, sure. Neil, a big part of this debate and disagreements over oversupply or surplus has also been which barrels are we measuring? How are we counting? Especially how are we counting supply? And of course, how do we assess demand has always been a question. But to my mind, this has been more a mystery of which barrels are we counting as supply. If you were to measure the excess oil in the world today, how would you go about it? And especially in terms of counting what China has taken into its strategic storage, in terms of counting oil on water, in terms of counting oil in transit, because we know there's been a lot of those figures out there as well, being sort of almost touted as that this proves that the surplus or the glut is there. How would you go about counting all the barrels on the supply side and the demand side?
Well, we're going to come to our old friend, the missing barrels. The first thing to say is that these days, the visibility of supply is way, way superior than it was 20, 30, 40 years ago when I was none but a lad. And we have a pretty good idea these days what supply really is. I mean, OPEC's still a bit of a lack of transparency there, but we are, because of the satellite technology, we are far better informed on supply. I don't think that not being able to count barrels in terms of the supply is really that much of a problem. The issue is on demand. And one of the things that we worked very hard at the IEA when I was there, and we never got much credit for it from outside analysts who usually didn't really know what they were talking about, is the question of data. And the problem with demand is that oil is used in every single country in the world, many different applications, many different grades. Data collection and processing is very difficult, even for some of the OECD countries, which are nominally supposed to turn in reliable data on time, don't always fulfill that. And the IEA makes enormous efforts to improve data gathering from non-OECD developing countries. And every single year in the summer, we used to get a big annual data dump from our colleagues, which would tell us that last year or the year before that, or even the year before that, global oil demand was actually 500,000 or 600,000 barrels a day higher than we've been thinking. So these missing barrels that we've been carrying, the gap between supply and demand and observed stocks, would then suddenly vanish or at least diminish. And I think we're in a situation now where oil demand is not being as accurately reported as it could be, and that's nobody's fault in particular. So underlying demand, I think, is stronger than the IEA and others are showing in their balances. Supply is probably about right. So I think the issue is more on the demand side. I think it is underestimated. And in time, the data will be revised, will come through, and that will support what Paul was talking about earlier on, that in fact, we are not talking about such a massive surplus as the implied surpluses from the EIA and the IEA are suggesting. And in fact, the implied surpluses will be closer to those that OPEC are putting forward. So a lot of it, I think, is to do with data.
Okay, that's interesting. And data and on the demand side, as you're pointing out, do you think we are particularly undercounting demand on one of a few countries or regions, or do you think that's sort of happening on a global level?
These upgrades that we used to get every year could come from anywhere. You'd suddenly be told that Nigeria, for example, was using, I don't know, 300,000 barrels a day more, I don't know, LPG or something. In Saudi Arabia one year, we got a huge change to numbers that were used in, or fuel oil that was used in power generation. We got all sorts of numbers come at you from almost random countries. So, you have to do your best to try. And every year we used to think, well, given that on average over the last decade, we've upgraded our demand number by X 100,000 barrels a day each year, maybe we should start doing that as we go forward. But no, you can't do that because you just don't know. And hopefully, the efforts of the IEA and others to improve data collection will bear fruit, and we'll have much less of a missing barrels issue than we have today.
Yeah, I certainly hope so. Paul Hickin, one of the questions the market has is that should this glut, or let's just call it surplus, actually manifest itself? We see just surplus barrels, or even the surplus that's at sea coming on shore and not enough buyers for it, and crude starts tumbling down. There's goes into a contango and so on. One of the questions the market has is, could OPEC Plus potentially step back in to rein barrels, not RAIN, to rein in their supply, and perhaps stop this surplus from continuing to put pressure on prices? Do you think OPEC Plus or the G8 specifically have a role to play?
Certainly, I do, and Happy New Year, everyone. Yes, I think they do have a role to play, and I think that's one of the big misnomers is that people talk about supply surpluses or balances in the market as if OPEC Plus has no agency. It's like these are the numbers for OPEC Plus for the year. So, and they are very active in terms of managing the market, and they've done a fairly effective job at doing that. So I think. Yes, I think all bets are off in terms of what OPEC Plus will do because they will manage the supply and demand of the market. And while they don't target price, you would think that, at one point, $70 seemed to be a de facto floor for them. There's a sort of a watchword for stability. Now it seems to be $60. But they are flexible and it depends on certain market conditions and all sorts of things. And I just wanted to point out one other thing, which to touch on what Neil and Paul were talking about, which is this issue about transparency of supply. Transparency of supply. I know Neil didn't think it was as big issue as demand, but I would say that transparency of supply, while it has improved in some ways, it's got worse again. I think you look at way China's been stop buying. That's people haven't really got a handle on what numbers are going in there. You look at the amount of sanctioned barrels around and the amount, and while we are effective at tracking it up to a point, it still comes out later. And there's ways of shipping that has become more effective at navigating the effectiveness of ship tracking. And then you've got what happened last year, which was what were real barrels from OPEC, and what were but the paper barrels, these numbers, and there was a big discrepancy between that, and we had to work out later. So again, we've got these missing barrels that will at some point will come back on the demand side, and we get these missing barrels that have to be recalculated later on, and as a result, the market does seem to run much more on narratives rather than data for so long until it sort of recalibrates at some point.
Yeah, absolutely. So talking about narrative and sentiment, Paul Horsnell, how much of this glut narrative do you think is real barrels? So if we are to take into account all the oil that has been accumulating on water thanks to Iran sanctions, tightened Iran sanctions, Russia sanctions, and how much is it paper sentiment? Because we have seen at least if you look at Brent futures and WTI futures, we have seen especially the speculative funds throughout last year keep their longs pretty much steady, but steadily build short positions. How much do you think is real, and how much is it just sentiment, which could evaporate relatively quickly if it turns out that those barrels weren't excess barrels, didn't really exist?
Yes, and you're very right to point out that only the shall we say the money manager or the fast money, the speculative element, has remained short through most of last year, particularly on WTI, where the short positions sort of amassed a little faster than they did in Brent, and that money is very sensitive to the narrative. And so we've all sort of spoken of the narrative, why it's important that fits in. But I think it's the starting point. If you're managing a fund and you're looking at what am I going to do in oil, first there's a lot more exciting commodities at the moment which are going to channel the interest on the upside. So what silver has done, and particularly what silver has done, copper, and all of them. So there hasn't been a massive amount of interest. And then they take it from the headline. The balances do matter in setting that narrative, and they're the implied balances are saying, right, I won't use the word glut, but a large surplus. And so as a starting point, you're thinking, well, this commodity hasn't got any price momentum and all these balances are negative. And so that change in narrative I think, would be very important in moving some of that short money back onto more neutral and then perhaps onto a longer position. The physical markets, again, it's no great surprise, follows straight on from said about the inventories not building in commercial inventories in important places. And for most of the year, the physical markets stayed relatively tight at the front end. So you've ended up with this curve, which looks a bit like a hockey stick. So it's depressed by the weight of selling at the front, but there is still a bid for faster delivery. You're still prepared to pay 10, 20, 30 cents more to get cargoes a month earlier, which isn't a sign of surplus. It's just a sign of the inventory data that we know that it's just not there. And it's certainly not incentivizing storage yet. So we're not at the point you normally expect if there really was if a surplus large enough hit the main areas, then you'd expect to see, as you said, market would switch into contango. The market would then create an incentive to put that surplus somewhere, i.e. through storage, and the hockey stick would disappear. It would just be the lowest prices at the front. So that's been set now for, well over a year. So a little bit tight for most global physical markets, but sentiment just massively negative. And I don't think anything's happened yet to sort of drive the narrative back in the other direction. I mean, but events this year in Venezuela, again, if you're an algorithm and you're just driven by headlines and reading imbalances, so just imagine you're a machine rather than a trader. Has there been anything in the last couple of weeks that makes you want to buy? And the answer is no, unless you're an algorithm programmed to do the opposite of everybody else, which is quite often a good strategy. But for the moment, there isn't enough there to drive any kind of positive sentiment in the financial market.
Yeah, so indeed, as you mentioned, there is no contango, there is no incentive to actually actively store oil on water. But I was just looking at what oil storage on water is looking like, and the levels seem to have, after a bit of a dip in December, seem to have gone up again, close to 180 million barrels or so, which is again the highest in 5 years. And just to take the sort of argue the counter view is that people say, look, there's oil on water is close to what it was at the peak of COVID in late 2020. How do you account for that excess? Do you not count that as a surplus?
You have to obviously distinguish between oil and water. Forget the in transit, because that's going somewhere. Yeah. And oil generally doesn't move around the world unless somebody sold it and somebody's bought it. So, in a sense, we didn't worry too much about that. Yeah. In terms of floating storage, which they normally measure as, tankers that haven't moved for a couple of weeks, so on storage. One thing we can say, absolutely none of that is put there for economic gain. No, nobody has looked at the curve and said, right, it makes sense for me to, so that's not trader storage. The vast bulk of it is related to sanctions. It's related to normal loading regimes. Iran, for instance, always needs a lot of floating storage just because its system doesn't have enough storage on land to be able to calibrate properly. So I'm not too worried by that yet. If we get to a point where there's a contango in the market and you can see that traders have an incentive to store it for economic reasons, then that's a different regime, and then we have to sort of start worrying about it. The amount of oil at sea, again, I think it was an element of the glut narrative was, oh, look, we can't find it because it's all floating around at sea. It's all going to arrive and, we're going to be awash with stuff. And what I think, the number was 1.5 billion or something at sea, which actually isn't the highest ever. I mean, that was even before the pandemic, the system, just we've moved to more shorter haul crude over time. And so over time, it's actually less than it used to be. So it doesn't matter too much on its own. But we think of 1.5 billion because we're used to 100 million barrels a day
Yes.
market. If you put the numbers around another way, okay, it's going to arrive in 6 weeks. Over 6 weeks, all of this 1.5 billion will disgorge. Well, the total amount of oil that the world's going to consume in 6 weeks is 4.2 billion. So there's 1.5. Now I start worrying about where's the other 2.7 billion going to come from, and suddenly I'm not in a surplus. And it's just a way of thinking. Of course, it does balance because other oil doesn't move internationally. There's other ways moving around, but it just means that 1.5 billion in transit actually just isn't a very interesting number. So it's all that we know where it's doing. I'd start worrying about it if there was a commercial element to it, but for the moment, it can normally be, I think, explained by sanctions and trade routes and all kinds of other aspects without seeing it as a surplus in itself.
Right. And we have a survey question here. Is OPEC Plus likely to keep oil output policy unchanged through 2026? Yes, you agree or you disagree. And OPEC Plus to abandon the price maximization strategy for market share strategy in the transition to its new baselines, which of course are going to take effect in 2027. Do you agree or disagree? Please go ahead and vote and let us know your thoughts on that. Neil, talk to me about what risk premium or premiums do you see that keep getting priced into crude and evaporating and priced back in? And how do you view the risk premium in crude?
Are we talking about geopolitical risk premium?
Yes.
I
Is there
suppose.
any other kind right now?
Well, there isn't any, is there? I mean, even in the summer, the height of the Iran Israel tensions, and we all got our maps of the Strait of Hormuz out and remembered how wide it is and how deep the channels are and all the rest of it, and how hard it would be to actually sink a ship that would, there is no risk premium. We are in a situation that, we've been talking about the surplus of supply of demand. There is a surplus of supply demand, clearly, because we've seen huge growth in production from the United States, from Canada, from Brazil, from Guyana, and doubtless others that I've left out. So there's loads of supply available. Russia has actually largely managed to maintain its production and exports, give or take, since the invasion of Ukraine. And of course, in fact, the sanctions against Lukoil and Rosneft, I think, led to an upsurge of oil going onto the water and leaving Russia, which is part of the sort of car park of tankers that Paul was talking about. So I really don't think there's any significant risk. I mean, Venezuela is the latest subject. We've all got our maps out and pointing out where the refineries are and the tanker terminals and all the rest of it. Venezuela's production, these days is less than 1 million barrels a day. Nobody knows the exact number. Even if, for the sake of argument, that were to cease, and it doesn't look as if it's going to, it doesn't make a heap of the difference, frankly, in the global market. So, the geopolitical risk, I don't think you can say there is any significant element of it. And we're moving along. The Venezuela situation is the latest thing, but it doesn't look as if it's going to affect the global fundamentals in any way in the short term. The oil instead of going to China, the 500,000 barrels a day or whatever it is that China takes as loan repayment. China imports 11.5 million barrels a day, doesn't it, right now, or certainly over 11. So the 500,000 that goes from Venezuela is no great shakes as far as they're concerned. And those US Gulf Coast refiners will love lots of nice heavy Venezuelan oil, which they were configured to receive years ago, and they will lap that up. So, Venezuela is the latest geopolitical subject we're all getting excited about, but there's no risk attached to that unless anybody disagrees.
And the oil is flowing, and especially after Trump said it will all come to the US. The reason I asked that question, Neil, also is that a lot of the argument from the glut proponents is that the reason we're not, there is lots of supply, and the reason we're not seeing crude spiraling downwards and going into a contango is because there's risk premium in crude. That's what is holding prices up. So,
where's the risk? I mean, where is the risk?
Yeah, that's you made your point, Neil. I mean, like Russian crude and refined products are continue to flow, and Venezuelan oil for the most part has continued to flow,
Iran?
and Iran. Well, to the extent it can produce and export, Iran has continued to do that
Yeah.
as
Yeah.
Right, Paul, coming back to you, we talked about OPEC Plus as a potential response to if a glut does appear in the market. One of the other responses is US shale as well, isn't it? Can we assume that if Brent were to continue going down, let's say into the 50s, that the US shale will not respond with any sort of attrition?
Well, that's been the story of the last couple of years, that US production, well, not just US shale, but US production has been hitting records this year. Even well, last year, 2025 is probably around 600,000 barrels a day increase. And even though drilling has gone down, but that's a testament to the technological improvements and efficiencies that the shale drillers have been managed to achieve. But I think we've hit the end of the road there, and I think you look at some of the forecasts talking about a modest decline or a plateau, and it probably likely to be correct that we are now at a war, especially at $60 a barrel, with no chance or little chance of a rise in the near to medium term. Yes, people talk about, as you get lower prices, there's more efficiency gains and, lower wages eventually work them way out, but that's going to take time, and they're really going through pain at the moment. And I think we are at the point where potentially there's no growth from US production in 2026. And that's big for, if you talk about looking forward, like Neil was talking about all the supply that's coming on in 2025, and there was Guyana, and he said not, and all the others I probably missed out. We actually probably didn't miss out any. There wasn't probably much else. It's really only, and that's one of the concerns when you go in, when you take your eye off the surplus narrative, is that you probably only got, what, 200,000 barrels a day growth in Brazil, same for Canada, um, uh, same for Guyana, and then which is now sort of slightly maybe have a bit more growth, but then you're looking at 700,000, maybe a little bit from Argentina, and maybe even Venezuela. They might have a little bit of an upside from this in the near term. Longer term is, but maybe maybe 100,000 barrels a day there. So you're looking at, it's going to be significantly less without any US growth there, and so it may make OPEC Plus's job easier in that regard. And once we get through the tricky first quarter, maybe OPEC Plus can think, well, actually now we've got through the 55, $60 barrel kind of range, and now we can maybe start to think about bringing further barrels back towards the second half of the year. That's still a potential argument, which sort of negates the kind of surplus thing, because it's there for a little while, but maybe not for long, especially if demand continues if we see those missing barrels come up that Neil was talking about, all of a sudden people think, well, actually demand has held up again this year. How long do we keep getting sort of wrong-footed by certain demand forecasts? So that's another question.
Yeah, indeed. We have about a couple of minutes left, and good to see that you're back, Neil. I'm going to have a lightning round for the three of you, short answers to two questions. What is your assessment of average oversupply in 2026? And when do you expect crude to slip into a sustained contango, if you do, in 2026? While you take a few moments to think that over, we can look at the results of the survey. Wow, majority agree that OPEC Plus is likely to keep oil output policy unchanged. That's interesting. And 50-50 on whether OPEC Plus is chasing prices or defending prices or chasing market share. Okay, we'll go into our lightning round. So I need just short answers from you. What is your assessment of average oversupply in 2026? You feel free to give a range. And when do you expect crude to slip into a sustained contango, if at all, in 2026? So start with you, Paul Horsnell.
Negligible surplus. I mean, a few hundred thousand max. Never in the case of sustained contango. I think we might shift into it, but I don't think it'll be sustained. And I'll slip in an extra answer for you. Key change in narrative, exactly what Paul said. US supply having peaked, not putting on any incremental growth this year. That's a big change in the dynamic. So for me, non-OPEC supply growth this year, 300,000 barrels a day, virtually nothing. That will sort out everything else.
Thank you. Neil?
Greetings from the Putney Triangle into which I fell a moment ago. I largely agree with Paul because I think demand growth is higher. The non-OPEC supply growth next year is going to be lower, maybe not quite as low as maybe Paul's suggesting, but it certainly will be. Therefore, yes, there's going to be a very, very modest, in the early part of 2026, yes, a surplus, of course, 1 million barrels a day, something like that. But as we move through to the middle of the year, later part of the year, we get into balance. And therefore, the contango situation does not arise.
No contango. We have a consensus so far, 2 out of 3. Paul Hickin?
Yeah, how can I disagree with these two heavyweights of the oil industry? But yeah, I would go with a similar. I'd say there's not going to be much supply and demand are pretty much like to be in balance in terms of growth patterns for. I think the IEA is a little bit out of whack for now, and even OPEC is slightly probably underbaking demand to some degree and supply to some degree. So I think it's about 1 million barrels a day for both. So it's going to be pretty much the similar growth patterns, I think, supply and demand. And contango as a result, maybe a little bit, but like you said, probably not sustained.
Yeah, which is why I added that word, sustained contango. I think we've had a few days of contango here and there in recent months. Okay, thank you very, very much for joining me. Wonderful conversation. Paul Horsnell, Neil Atkinson, and Paul Hickin. Have a great day ahead and great weekend.